The rise of the startups is very closely tied to the weakening of the keiretsu. These vertically integrated conglomerates started to weaken. It opened up the possibility, opened up the markets for startups to compete.
I think Japan as a market is attracted to Taiwan startup as opposed to maybe Europe or Southeast Asia, or maybe even the US. Japan from north to south has similar preferences, language, and both corporates and consumers have considerable spending power.
Japan is less transactional than many markets are. The most important thing you have to do, whether you do it through partnerships or you do it directly, is signal that you're committed for the long term.
Hello and welcome to Connected. I'm Divi Gopalan. When Appier listed on Japan's stock market nearly 4 years ago, it was recognition that the country was fast becoming Asia's leading startup destination. The artificial intelligence software company remains one of just a handful of Taiwanese unicorns, which are valued at over $1 billion before going public. And it was the first Taiwanese firm to list in Japan in over 25 years. Now, to help us understand why a wave of young and ambitious Taiwanese companies are taking a similar path in the hopes of making it big in Japan, we are joined by Alan John Koo in Taipei. He is the Director of Operations at Startup Island Taiwan. And from Tokyo, we have Tim Romero, a partner at Jera Ventures. It's a corporate venture capital fund focusing on energy digitization and decarbonization. He also hosts Disrupting Japan podcast. Thank you both for being part of the program. I'm going to start with you, Alan, and let's start with a little bit of context on Startup Taiwan. And give us the reasoning behind launching its Tokyo hub in October.
So Startup Island Taiwan is supported by the National Development Council from the government of Taiwan. And the main goal for the Tokyo hub office opening is to really just bring about ease or convenience or make it a little bit more, the pathway to Japan a little bit more easier. I think our hub's main functions will be to serve as a co-working space, also to set up a business entity as we are able to use it as an address to set up a bank account. Because I think Taiwan companies to go to Japan, there's a lot of barriers. We just hope to bring the barriers down.
Right. So, Tim, you know, Japan was once associated with like these big conglomerate companies, or keiretsu, I believe is how it's pronounced. And they're usually quite traditionally structured businesses. Why is there now this focus on startups?
Well, I think that the rise of the startups is very closely tied to the weakening of the keiretsu. So as the keiretsu, which were these vertically integrated conglomerates, started to weaken, it opened up the possibility, opened up the markets for startups to compete and for foreign companies to enter the market. So that's really been one of the driving forces. And people talk about the last 10 years as like the lost decade. But that was really setting the stage for this current boom we're seeing in startup innovation in Japan.
And I do want to get into some of the other factors for that, along with Taiwan's possibility of having its own startup ecosystem. But before I get into that, Alan, we mentioned Appier, which is among several notable startups from Taiwan that have found success in Japan. The other ones are 17 Live, Aikala, and KK What's the attraction?
I think Japan as a market is attracted to Taiwan startup as opposed to maybe Europe or Southeast Asia, or maybe even the US. I think mainly because those other regions have multiple languages, very varied or diverse cultural identities. There's a lot of fragmentations in terms of a lot of, it's a challenge for companies from Taiwan. Japan from north to south has similar preferences, language, and both corporates and consumers have considerable spending power. So, and proximity is a plus too, I would say.
And Tim, how much can we compare this recent startup scene in Japan to Silicon Valley when it was going through its evolution?
Well, I think it's almost unfair to compare anywhere in the world to Silicon Valley. Silicon Valley was this once in a lifetime, once in a millennia confluence of events that led to this amazing creation. And even within the US, they've not been able to recreate it. But I think if we look around the world and we see what's happened in Singapore, in Paris, and London, and Boston, Japan's on a very similar trajectory. In fact, the government of Japan has actually been looking very explicitly to the policies and programs set in place in France to model the next 10 years of startup growth rather than Silicon Valley. So I think this is a global phenomenon, and it's an incredibly exciting time in Japan and pretty much anywhere in the world to be a startup right now.
Saying that, Alan, you've started a Silicon Valley hub recently. So how would you compare that to what we're seeing in Japan, especially for Taiwanese companies? What is defining their choice on which direction they're heading?
I think you could say for Taiwanese companies, U.S. is still a challenge. I think we've had success working with health-related startups to the U.S. I think consumer behaviors are a little bit different for Taiwanese companies to cater to. So Japan has been an obvious choice for B2C companies. But for U.S. market-wise, I think for Taiwan, we've seen success in health-related and more B2B enterprise software companies heading there. It is a challenge still for the U.S. for a lot of Taiwan companies.
Yeah, if I could add just a bit to that. So one of the big attractions of whether it is other Asian companies coming into Japan or Japanese startups going global without going to the US is that the US is perhaps the most difficult market to enter. It requires a huge amount of capital. It requires a large expense both in the recruiting and in the amount you have to commit to competition. Whereas going into smaller markets allows startups to find their product market fit outside their home market, refine their offerings, and make sure they're really ready to go to the US. So it's not an either or, it's just a question of the priority, where you go first.
Agreed.
Right.
Yes.
And anything you want to add to that, Alan, about priority or maybe perhaps the path it is? Would Japan become a starting point, a jumping point, and then you head west from there?
I think Tim hit it on a point. I think the U.S. for every startup, U.S. is the goal, but I think you hit it on the head when you said the costs and expenses are considerable. So yeah, you hit it on the head. I think other markets closer to the region have been a starting point, and then U.S. might be the ultimate goal in the future. Yeah.
All right, you mentioned costs and expenses. Let's look at investment. Let's go take a look at some numbers here. The following graphic shows that Japan has lagged behind in terms of investing in startups. Now, it ranks 20th in the world when we look at venture capital investment as part of total GDP. That's behind smaller economies such as Estonia, Sweden, and New Zealand. In fact, Japan is the world's fourth largest economy with GDP at over $4 trillion. Now, Tim, investment in Japan's startup ecosystem, given that has increased and some estimates say almost tenfold over the past decade. Why has that money come pouring in, and what effect has that had?
Well, you've hit on a really big problem right now, is that there really isn't enough investment in Japan. Although we have seen a tenfold increase over the last 10 years, it was starting from a very low level. Recently, both the government of Japan and Keidanren, which is the largest industry lobbying group, have committed to a tenfold increase in startup investment over the next 10 years. So we should see, and we are seeing, a lot more investment. But part of it is on the supply side as well. If we suddenly had 10 times more money to deploy into startups, we don't have the quality of startups here yet that we could put that money into productively. So it's a slow, steady growth. And if you look at the startup trajectory in Japan, in the US, it's incredibly chaotic. It'll be up 80% one year, down 50% the next. But in Japan, there has been this steady 20% annual growth of investment that is continuing. So I think Japan's on the right track, but the amount of money being put into startups needs to accelerate. And the number of quality startups, the number of startups that can go global really needs to accelerate as well. Because we are behind.
And Alan, when it comes to investment in startups, what's the scene like here in Taiwan?
Okay, I think Taiwanese investors, there's a few mechanisms, but in total, Taiwanese investors are quite conservative. I think you see that with our corporates aren't as active as the Japanese corporates are in terms of CVCs and investing. But I think there's a few mechanisms. The National Development Council has what we call the NDF, National Development Fund, which has been working with 500 Global in the past. We've worked with JAFCO from Japan. We also work with Headline Asia from the National Development Council. And I think recently we've worked with Jera Ventures out of Southeast Asia. So the government has tried to incorporate VCs from US, Japan, and Southeast Asia to help jumpstart the kind of investments into the startups. So in that respect, to take the stress off of the conservatism, I think that's the way the government's really trying to bring about more investment. So I think to also lessen the risk for the investors. So NDF has kind of tried to step in and bring the investment amount up.
Tim, Alan mentioned the role of the bigger corporates, and we mentioned Keiretsu. How does that work with the startups, or are startups trying to compete with this Keiretsu? In that case, aren't they then on the back foot?
Well, I think the more forward-looking startups are definitely trying to compete with the Keiretsu. Most of them aren't yet. But I think one of the drivers of having this growth of CVC investment in Japan, of the Keiretsus partnering with startups, has been the final acknowledgement that Japanese R&D is broken. For 40 years, Japanese Keiretsu, Japanese big companies had this amazing ability to innovate at scale. And in the 90s and into the 2000s, that increasingly broke down. And startups are starting to fill that role. And these enterprise startup partnerships, these long-term partnerships, is a emerging model in Japan, which is in contrast to the US, where things seem to be much more transactional and combative. It's something that's emerging as a unique model here in Japan. But I personally would like to see more aggressive startups who are trying to take on the old guard directly.
If I could add to Tim,
please.
I agree with you most. I don't want to say, you put it something where you said the R&D is broken. I can't say that myself, but I feel like from our perspective here in Taiwan, we see many both CVCs from Japan directly, or these mega banks such as MUFG or Mizuho or SMBC servicing their corporate clients come to Taiwan actively trying to look for solutions for their clients. I'm engaged right now with MUFG, and they have a team locally here in Taiwan that scouts Taiwan startups actively, reaches out to us to have. They have these problem statements to say, hey, do you have startups that can fill these needs? Just to your respect in terms of R&D, they do look for startups, not just in Taiwan, but around the world to fill these needs.
Yeah, and there's actually been a complete rethinking of the role of mergers and acquisitions in Japan, where M&A used to be exclusively distressed assets, things you could buy for a fire sale. The role of strategic M&A, of paying above market price to get into a market that you don't have access to yet, or get access to a proven product so you don't have to develop it, is finally becoming mainstream in Japan. And that's another factor that's really driving large corporates into partnering with startups, not just in Japan, but globally.
Another interesting development I want to tap into there, Tim, is the fact that we're seeing more university startups and more young graduates looking to forge their own path rather than fitting into the traditional system that the perhaps previous generations have. Why is that?
Well, I think it's a couple of things. I think the biggest thing is as the Keiretsu influence wound down, there was an end to this lifetime employment. There was an end to the promise of guaranteed promotions. So suddenly new graduates started to ask themselves, quite rightly, well, why should I commit to this company for my lifetime if it's not going to be reciprocated? And so at the same time, venture capital and risk capital became available. And it just made more rational sense to go out on your own than it ever has before. In terms of universities, there's an incredible amount of technology and IP that's locked up now inside Japanese university research. And one of the primary objectives of government policy around university innovation is to help unlock that, to turn that into marketable products. And we're seeing a tremendous amount of innovation and startup formation around the national universities throughout Japan right now.
And Alan, are we seeing that same kind of appetite here for young people to venture out on their own? And what kind of encouragement are they receiving, or are they receiving that encouragement or being told stick to the stable path of joining a big company where you're going to get a monthly salary?
I think in Taiwan, most parents are going to push you towards the stable, go to TSMC, go to Foxconn, or go to the major banks. But there is a segment of the population or youth that is considering entrepreneurship or joining a startup to get their feet wet and learn the startups. I think something particular about Taiwan startup founders is the average age is actually older. It's ranging from the late 30s to the early 40s, as many of the startup founders here in Taiwan are ex-OEM engineers who come out and create. The government is trying to push a youth movement in terms of the startup founders, but it's a little bit different than some other ecosystems where the average founders are like 22 or 19. So yeah, we have a little bit older scale of the founder ages here in Taiwan.
Well, I think that parents always don't want to have their children start startups. Parents always want what's best for their kids. So they want them to do something successful and safe. And my parents were completely opposed to me starting my first startup. So I think that's just a universal truth.
True.
That is so interesting. I also want to get another perspective here on this whole kind of startup ecosystem, particularly in Japan. And this is someone that would be familiar to you, Tim. This is from Yuki Shirato, who's the managing director of Techstars Tokyo, part of the New York-based Global Accelerator. And he told us why Techstars Accelerator program launched in Japan.
So we run programs in 33 different cities, as far as I know. And Tokyo is the only Asian city right now. So Techstars always wanted to move to Japan market, but I think Japan was not ready. For example, 2013 to 2023, the amount of venture capital investment has grown tenfold, right? So before that, it was not significant enough for the Techstars or any other significant startup players from the US to enter Japan. So I think that now time has matured. It requires three things. It requires capital, it requires talent, and then it requires excitement, the people's mindset, like entrepreneur mindset. And then finally, I think Tokyo is starting to be at the level of other major cities in the world in terms of all three.
Now, he mentioned a few reasons why Tokyo has become so attractive. But what do you think draws these guys and other venture capitalists to Japan, Tim?
Well, I think right now, there's a long-term and a short-term answer to that. So over the long term, Japan is a huge market. There is a history of innovation here. So there is a tremendous amount of potential that people see. In the short term, the Japanese government has been very aggressive and very generous in funding startup innovation programs, bringing in some of the best foreign programs and foreign talent to Japan. Techstars is a great program. I was a mentor there for this year's program. So I think in the short term, right now, we're seeing a lot of kind of pump priming of the government investing in these startups and these programs to get the idea out there, to inspire people. And then when they kind of turn off that tap, the momentum continues, that we see this new wave of innovation.
Alan, if you were going to advise advise the startups that you regularly speak to about entering Japan's market, what would you say to them? What would be your key piece of advice for them?
I would say really first to find a representative locally in Japan, I guess both for ease of communication to your client and also servicing. And also, hopefully, you can get some warm introductions or a strong reference partner. Just so in case you work with a corporate or investor, you have that warm reference or introduction. You need that. It's still like within the Asia, I guess, culture. You need someone to kind of bring you into the fold.
And Tim, what do these companies need to get that relationship going? What is it that Japan's looking for?
I think the single biggest mistake I see foreign companies make coming into Japan is they don't signal commitment to the market. So Japan is less transactional than many markets are. Particularly enterprise buyers are used to seeing a steady stream of new entrants into the market, promising they'll be here forever, and then pulling out after 3 years when things get difficult. So the most important thing you have to do, whether you do it through partnerships or you do it directly, is signal that you're committed for the long term.
All right, I want to change tack a little bit and talk about sectors and the kind of startups that could possibly do well, especially in this current environment that is so focused on AI. Are we seeing many of those, Alan, that are related to AI or have some product that will be riding the AI wave, trying to head to Japan?
Well, yeah. For myself, the companies we work with and working locally with the CVCs or the major mega banks, I think manufacturing AI is quite big, and we've seen success both with the corporates or support from the government, Tokyo government or JETRO, in terms of manufacturing AI. One key example is a company in Japan that relied on a AI company from Taiwan to do QC or quality assurances check, as they were getting backlogged. So the front of the line was producing more than the QC could check with humans. So I think that's one thing that, and the major reason is because Taiwan OEMs they utilize such services for their factories both in China and Taiwan. So many Taiwanese startups have already adapted their solutions to serve Taiwanese OEMs. But in turn, it's a solution that Japanese factories are currently now like, wow, Taiwan OEMs have had this quality check without humans for the last 6 years. So it's slowly going into the Japanese ecosystem. But to your question, sector-wise, manufacturing AI, and one other is cybersecurity, as TSMC and the whole supply chain for Taiwanese semiconductors is currently operating in Japan. Taiwanese cybersecurity is a big thing, as kind of our threats are similar in scope from our competitors. So I think that's something mutual between Japan and Taiwan to meet these same cybersecurity threats.
Tim, where's Japan in its AI journey? Are we seeing young companies kind of locking into that and realizing that is the future, perhaps the way we've seen in the US?
We are. I think Japan, what we're seeing in Japan, there's a few kind of AI generalist companies like Sakana AI, but there's also a lot of companies that are doing very interesting things in robotics and AI. So I also think that right now, I mean, AI is fantastic. There's an incredible amount of innovation and market opportunity opening up within AI. But as a startup, any startup that's solving real problems is valid. You don't have to be an AI startup. So solve a real problem, and you're going to do well.
Oh, fantastic advice. Solve a real problem. And then in that sense, Alan, and you may have touched on it a little bit, what are the real problems that the Taiwanese companies here or startups are trying to solve, or that you see are gaining traction internationally, perhaps not just to Japan?
I think one notable sector would be healthcare. Taiwan does have a universal healthcare system that's very well maintained by the Taiwanese government, but in turn, it has spurned a large group of healthcare companies and startups in terms of not just, guess you could say, standard diagnostics, but Taiwanese as a manufacturing country also, this relates to kind of producing a lot of IoT devices. So healthcare has been major, and with the aging populations of East Asia, Korea, Taiwan, Japan, we've seen a lot of solutions in terms of healthcare. So, but healthcare is a major sector for Taiwanese globally. Yes.
Indeed, and with all the many countries facing aging societies, it is a very real problem. So great to see that Taiwan is addressing that. Tim, then finally, as we're wrapping up the program, what would be your key message or advice for Taiwan startups who want to IPO in Japan?
I'd say make sure that make sure you're solving a real problem. You're committed to the market. The path to IPO in Japan is pretty straightforward. So if you're solving a real problem, you have growing revenues, you're going to do fine. You'll be on a steady path to IPO. If you're just coming into the market, make sure you're committed. Make sure your customers know you're going to be there for the long term.
And with that, we'll leave it there. Thank you so much, Alan John Koo, Director of Operations, Startup Island Taiwan, and Tim Romero, Partner at Jera Ventures, speaking to us from Tokyo. Thank you so much. And to our viewers everywhere, it has been good to have your company. If you've enjoyed today's episode or have anything you'd like to add to the dialogue, join the conversation on our social media. And remember, stay informed, stay engaged, and stay connected.